Okay, guys, let's talk about the general ledger. Here is an example of a general journal, okay, with multiple transactions on it. And each tab down here is your asset accounts in the ledger, liabilities, owner's equity, revenue, and expenses, okay? So, when you're talking about the general ledger, the whole purpose of the general ledger is to keep track of the balance for each account, all right? And when we do this by applying the transactions to the general ledger to see what our current balance is. So you'll notice here that we are on General Journal page 1. That's important. It's the 2017. Yours might have a different year because I created that document a different year. You can change it or use the year that's there. March 1st, and then we have a debit to cash and bank. Excuse me, that should be deleted. From cash and bank of $5,000. So we're going to go to assets because that's what cash and bank is. We're going to write 2017 March. March 1st. The description we leave blank, and the post reference we put a G1 because it's coming from General Journal page 1. And we had a debit of $5,000. Now, because this is the first transaction and there is no balance, we had to record the year, the month, okay? And then on the debit, we're now going to put $5,000. All right. So then this was an account 101. Now, since this was an asset, we only record the balance column should only be debits because that's where an asset carries its balance. And the liabilities and the balance columns, you should only record in the credit. The transaction amounts are recorded in these first two columns. Okay, so now we have the account number 101. So we're going to go back to General Journal and we're going to put a 101. This means that we posted this $5,000 debit to cash and bank in account 101. Ronald Hicks Capital had a credit of $5,000, so we're going to go to owner's equity. We're going to record 2017, March 1st. Again, General Journal, page 1. Okay, credit of $5,000. Okay, again, we have no balance, so we're going to write $5,000 here. Okay, and again, since it's capital, which carries a credit balance, we're going to record it in the credit balance column. It's account 301, so you're going to come over to the General Journal, and you're going to write 301. All right, that transaction's done. Now we have another one with a debit to cash and bank on March 8th. The debited amount is $6,000. So we're going to go to assets. We don't need to record the year or the month because it's the second transaction, so we're going to put the 8th. It is from General Journal, page 1. Now, why do I keep doing this in the post reference? So when people come in and they want to evaluate your accounting paperwork, they sometimes need to know where you got your information from. That's why we put the G1 there, so that they know they need to go to General Journal page 1 to find out where this transaction amount came from. Now on that little tangent, I forgot the amount. So it's $6,000 debit to cash and bank. So the transaction amount was $6,000. Now, that means we have a debit balance of $5,000 and we had another debit of $6,000, so we need to add them together. Now, you can do this using your calculator or you can use formulas in Excel. So to start formulas, I'm going to do an equal sign. I'm going to click on the previous balance. So now it says G7, which this is column G, row 7, that we got that amount from. And we're going to add the 6,000 and we're going to hit enter. Now again, if you don't understand formulas or you want more help, let me know and I can help you. But you just need to at least keep the running balance. We added the previous 5,000 to the 6,000 debit. So our new balance in cash and bank is 11,000. And it's account 101. All right. So now we have a credit to equipment revenue for 6,000. So we're going to go revenue 2017, March 1st, General Journal page 1, credit of 6,000. It's the first transaction, so that's our balance of 6,000. Okay, it was account 401. So you come back here, type 401. All right, so now we're making a payment to this account. I'm going to kind of skip the accounts payable and go to the cash and bank because I want to see what happens on a credit of cash and bank. Okay, because we've done two debits, now I want to see a credit. So you can kind of see how the plus and minuses work for all accounts. So we have a credit to cash and bank for $1,500. Okay, so I'm going to go to cash and bank. Oops, excuse me. This transaction happened on the 10th. For the 10th, it's still general journal page 1, and this was a credit of $10,000. Okay. Now, if this happens in your Excel documents, that means that this column is too big. So we're going to double click and make it big enough. Okay. And I said 10,000, but how about 1,500? All right. Okay. So now I have a debit balance and a credit transaction. This means that I'm going to subtract. Okay. So again, you can use a calculator and take 11,000 and subtract 1,500, or you can type equals, click on that 11,000 amount, type minus, click on that 1,500, and hit enter. So the new balance of cash and bank is 101. So basically all ledger accounts work this exact same way. The difference is what side is their balance on. So again, all assets are going to work just like cash and bank and have a debit balance. All liabilities, you're going to be dealing with a credit balance. So credits will be added and debits will be subtracted. As always, if you have any more questions, please let me know.